Hi everyone, welcome back to the FAR classes of US CPA. In this particular video, we'll be discussing in detail about fundamental of US GAAP and the objective of US GAAP. So you'll get a deeper understanding how the US GAAP has been developed, what are the objective of US GAAP, and from where all we can extract those GAAP in this particular video. So let's dive into to understand more in detail. So now let's understand the fundamental of GAAP. So fundamental of GAAP, which is like generally accepted accounting principle, are basic accounting principle and the standard and you can say the specific conventions, rules, regulation that define like accepted accounting principle at any particular time by incorporation or consent with the substantial authoritative support. So this US GAAP are being framed to give you the guidance for the respective accounting or respective, you can say, transaction, how to do the accounting of the transaction and how you need to disclose for the user of the financial statement in the financial statement. So it cover both the things. It cover how you need to do the accounting and how you need to disclose that for the benefit of the user of the financial statement, right? And other non-authoritative accounting guidance also being included in the fundamental of GAAP, which include like which helps in practice that widely recognized and prevalent either in generally or in the specific industry. If you have seen like 900 series in the accounting standard, these all are being focused on, you can say, industry practice, whether it's like oil and gas, whether it's like software industry, whether it's telecom industry. So those kind of guidance is also being provided in the respective GAAP. And the FASB concept statement also being provided there, which will help you, sometime everything may not be written in the GAAP, right? Or every kind of scenario might not be available to be written in the GAAP. So if that is the situation, then what all additional literature you should look for? That include like FASB concept statement or AICPA issued paper or IFRS also. You can give the reference to the IFRS and the pronouncement from the professional association or regulatory agency, technical information service or technical practice aid, and you can say accounting textbook, handbook, and articles. So if you see this non-authoritative literature, so authoritative literature is only GAAP. But if something you're not able to find in GAAP, how to work on those, right? For that, there are certain additional literature provided, which is considered as non-authoritative literature. And that would be in a sequence. You need to consider in a hierarchy. In a hierarchy, number one would be practice, which is being widely used in the market. Second is FASB concept. Third is AICPA issued paper. Fourth is IFRS. Fifth is pronouncement from the regulatory agencies or association. Sixth is technical information. And the last one is the textbook, handbook, or any article from the newspaper. Right? These are the sequence, or you can say hierarchy, in which you can consider the respective literature. If that specific, you can say, transaction or the questions you have is being not covered in the accounting standard codification. If it is covered in accounting standard codification, then you are not required to look at right, left, and center. You need to go by the accounting standard codification, right? Now coming to the objective of GAAP. What are the key objectives of GAAP? First is, by using the GAAP, company wish to achieve the objective of providing the relevant information, reliable information, and comparable information to the user of financial statement. Who are the user of financial statement? Any idea? Who are the user of financial statement?
Investors, financial institutions, shareholders, all those people.
Yeah. So, is the user of financial statement for a private company different than a public company? My
Can
question is the user of financial statement of public company is different than the private company, or would it be same? Hmm?
Mm, I don't know. They can be different.
It would be
Hmm.
different actually.
Mm-hmm. How?
So public listed means listed companies, there are so many shareholders,
Mm-hmm.
and there could be like the financial institutes like banks,
Mm-hmm.
and government is also the one of the user of the financial statements.
Mm-hmm.
But if I go to the private sector, the number of actually shareholders are limited,
Mm-hmm.
and they are not trading on the any exchange.
Mm-hmm.
So that is the main difference actually.
Yes.
Their
Yeah, very good, Prashant. Very well explained. So, for a private company, the user of financial statement or the stakeholder of the financial statement are limited to the shareholder, board of director, maybe if they have taken a loan, then banking and financial institution. But for a public company, it's being widely used, and there are wide set of user of the financial statement. It may be like the shareholders, which is public at large. It may be the Security Exchange Commission, right? It may be like banking and financial institution. It may be financial analyst. It may be their customers. It may be their vendors. It may be their employees, right? So there are wide number of user when it comes to the public company. Hence, the rules and regulations are being more stringent for the public company accounting as well as auditing purpose compared to private company accounting and auditing purpose, right? But the key objective of the GAAP is to meet the user of the financial statement expectation by providing relevant information, reliable information, and most importantly, comparable information. That is, what you have mentioned in current year is being very much comparable with the previous year. It should not be like previous year you have taken some other stand and in current you are taking some other stand, right? So, for example, like inventory. You have an idea what is inventory is all about? Huh? Raw material, WIP, FG?
Yes, sir.
Yes, yes.
Yes, yes.
Say it loud, yeah. So
Yes,
you
sir.
know
Yes, sir.
inventory, right? So in inventory, there are couple of methods for the valuation of inventory, right? Have you heard about FIFO method, weighted average method, LIFO method,
Yes, sir. FIFO,
right? You
LIFO,
might have
and
studied
weighted
in your
average.
graduation.
Yes, sir.
Yes,
Yes, sir.
sir.
Hmm? Right? So it should not be like in year one, you are using weighted average method, and next year you are moving to FIFO, and then next year you are going to LIFO. Right? That's not permissible. If you are changing the method, then you need to consider the impact in the previous year also, so that both the numbers are being comparable, right? So some of you are chartered accountant, and some of you might have done your CA before 2013 of the new Companies Act, right? Have you heard like transition impact of Companies Act 2013 in India? Any idea or no idea? Okay, some of you are working with EY, right? So you might have heard like earlier there was accounting standard for revenue recognition is called ASC 605. That has been changed in 2018 to ASC 606. Have you guys heard about it?
Yes.
Yes, no,
Yes, sir.
right? So when there is change in accounting standard, what was the impact? Retrospectively, prospectively, or full retrospective or modified retrospective? Have you heard about any of these terms?
Uh, yes, sir. And I think it was prospective because the company is not changing the method. It's basically a change in the standard itself, the legal thing. So that's why it was prospective as far as.
No, no, no. It was always whenever there is change in method or there is change in accounting standard, it will impact retrospectively. But there was option given to the companies to consider full retrospective or modified retrospective, right?
Okay.
Whenever there is a change in accounting standard or change in accounting method, impact will always be considered retrospective. But when there is change in estimate, the impact will be prospective, right?
Sir,
So it,
full retrospective, modified retrospective में difference क्या है? What is the basic difference?
we'll come to that when we come
Okay.
to the standard. Full retrospective, that assume from the day when your company have using it. But modified retrospective, just go to the previous year and update the opening balances.
Okay.
So comparison should be apple to apple, not orange to apple,
Okay. Okay.
right? So we'll be discussing more in detail once we jump into AC 606, 842, 326. So we'll discussing all these impacts, right? So that is the objective of the GAAP, to provide user of the financial statement relevant information, reliable information, and comparable information, which is apple to apple comparison, not apple to orange comparison. Now, coming to the basics of GAAP, when we are developing a GAAP, what all things we need to keep in mind? First one is the assumptions. So assumption is like business entity. So this GAAP is being developed for business, or we are developing it for NGO, or we are developing it for the government entity. What kind of entity we are developing the GAAP? Second is going concern. Have you heard about this term before? Going concern?
Yes, sir.
What is that?
Sir, it is that like whether the company has, able to do its operation within the, next 12 months. He
Yes,
has
absolutely right. Absolutely right. Whether the company will be able to perform their operation in next 12 months or not. If answer is yes, you will be preparing the financial statement on a going concern assumption basis. If answer is no, then you need to prepare the financial statement on liquidation basis, right? Then what is the monetary unit for measurement? US dollar, INR, euro, what exactly it is, and the time period. Is it 3 months, 6 months, 9 months, 12 months, 52 week, 53 week, 50 weeks? And in US, it is also being allowed. You can consider your year of 52 weeks rather than 1st January to 31st December. If you see the financial statement of Intel, if you see the financial statement of HP, if you see the financial statement of Apple, they are all 52 weeks. They're not following like calendar year, but they're following 52 weeks a year, right? Next important thing for the basics of GAAP is the principle. Those principles include historical cost. Historical cost is basically the cost of acquisition which you have paid. Revenue recognition, more on accrual basis, matching principle of expense and accrual, and the full disclosure principle. We'll be covering one by one in detail. So I'm just sharing high level overview, what contained in a GAAP and how the GAAP has been built. And when you are making a financial statement as per any financial reporting framework, what all assumptions and principle you should be keeping in mind. And the constraint is objectively applying the principle, materiality concept, consistency of the principle, conservatism principle, and the cost benefit analysis. These all things you need to keep in mind when you are preparing the financial statement under any GAAP, right? So any doubts so far what we have covered? I quickly take you through what all things we have covered before we jump into the syllabus or more detail about FAR. So if you see, we have covered the overview of FAR, like what all 4 chapters you have, what is the weightage of that chapter, what is the exam pattern, what is like respective testlet contain, what is the skill set is being tested in the respective section of the exam, then overview of the GAAP, overview of the, you can say, governing bodies, right? Then we discuss about AI-CPA, all the 4 vertical of AI-CPA, FASB, formation of FASB, how to develop the accounting standard codification, structure of the codification, and then we have visited where these accounting standard codification are being available to us 24/7 free of cost, right? Then if you see, we have covered fundamental of GAAP, objective of GAAP and basics of GAAP, right? Any doubts so far before we jump into the detailed syllabus? So far, so good?
Yes, sir.